Hello everyone, welcome back to another Tahmid Talks video. If you're a subscriber or repeat viewer, if you're new, it's great to have you. Don't forget to join the community and support content you watch by hitting that subscribe button. Now I make a lot of these personal finance videos, and today's topic continues in a similar vein, albeit a little more macro. If you invest your money or even if you don't, listen, I have received messages this year from family and friends about if the recession is on or not, like it was a concert or something. But yeah, you have probably heard about the stock market and in general different asset classes melting down in 2022. It seemed to be a year in which everything was down. Well, not interest rates, but those were way up around most of the world. But a lot of investors were hurt, whether in stocks, bonds, real estates, or whatever asset class. Except for those of you that were in gold. All the gold bugs rejoice. Then you had a decent year in 2022 from the looks of it. But the main focus of this video are the stock markets, and more specifically, the Canadian and American ones, since those are the ones I'm most familiar with. But don't worry, global viewers, your country might make the list too. So as I was mentioning earlier, interest rates play a major role in dragging the stock markets down. Now why is this? Well, as you may know, interest is the cost of borrowing money, and businesses borrow money to grow and sometimes when times are bad in order to survive. As cost of borrowing for businesses become higher, their profits go lower, and ultimately stocks are a reflection of these sales and profits that a business makes longer term. You may have heard of the chaos in tech stocks or growth stocks. Well, these are generally stocks of companies that borrow a lot of money, and debt-fueled growth was punished by investors as interest rates started rising really quickly. In fact, in 2022, countries such as Canada and the USA experienced some of the fastest interest rate rises in their history, and many other central banks from around the world followed suit in raising interest rates. This was seen as a necessary evil in order to curb inflation. The rise in price of everything from cars to clothes that was spiraling higher, out of control, making everyday living unaffordable. But there were definitely more macro problems than just interest rates that happened to stocks in 2022. You see, stocks really hate uncertainty, so when you don't know how much higher inflation will go, hence consumers turning pessimistic, meaning they'll spend less and possibly drive economic growth lower, it really crushes things on the demand side for stocks and risky assets. And pessimism in the stock market is a self-fulfilling cycle. Losses bring on more losses as paper hands dump their positions en masse amidst the pain. And given all the uncertainty, 2022 was a notable losing year. Definitely not the worst on record or anything, but bad enough for people to be talking. But beyond the talk, let's look at some of the numbers of how bad 2022 really was. Well, the Canadian Toronto Stock Exchange was down 8.66%, which is the worst year on record since, well, 2018. So not bad at all. It was largely propped up by the many energy and material companies that are found on the TSX. The big three American stock markets fared much worse, especially because they have more tech companies, which had a downright, brutally bad year in 2022. The S&P 500 was down around 19% for its worst year since 2008. The Dow Jones, with more old guard industrials, did better, being down around 9%, the worst year since 2008 as well. And then there's the tech-heavy Nasdaq, which did a hefty 28% or so down, also its worst year since the turbulent times of 2008. So basically, American stocks did some gains reversing in 2022. So how about some other major stock markets around the world from China to Brazil? Well, it was a pretty bad year across the board, with the MSCI All Country World Market Index down about 21%, wiping out about $18 trillion with a T in investor value. So what does the new year 2023 and beyond have in store for stocks and investors? I'd like to say my crystal ball is broken, and trying to predict the future may be a fool's errand. But history tells us that 2 years of negative returns among the major indices, especially in North America, is rare, given the resilient nature of stock markets. But on the flip side, when there is a second consecutive year of losses, the losses get even deeper than the first year. What I do know is that interest rates and central banks, how stock markets react this year, at least in the short term. Also, the also 2022 issues of inflation, war, and supply chain constraints will remain relevant as ever and are worth monitoring for investors, because these uncertainties will shape investors' sentiments and hence shape stock market returns into this year. You can always check out my other personal finance videos, especially the Money Talks series. It's easier to keep tabs on all the content on Tahmid Talks if you're a subscriber, so don't forget to subscribe up. I'll catch you on the next video. Peace.